What's up, everyone? It's Scotty with MoneyVest. So it's been quite a week in the markets. We have seen the three things drop in the last, not only the past 1 week, but also in the last several months. And this is the crude oil prices, the treasury yields, and the dollar index. The three things that obviously have been rallying since July. And as a result, the markets were lower. And now we've started to see them rotate back lower since October, pretty much towards the end of September, middle of October. And as a result, markets have obviously seen a very nice momentum back up. So we are done for the week. Next week, it's going to be Thanksgiving. So it's going to be a shorter week. And NVIDIA is going to be reporting earnings as well. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. And don't forget to subscribe to the channel. I would really appreciate that. And links to our Discord and Patreon is going to be down below. You do get access to a lot of members-only benefits, including Excel spreadsheets, members-only videos, Discord channels, 20 plus channels, including trade alerts, trade ideas. Everything is going to be included. Couple more spots left in the month of November with a 16% annual discount that does expire and end towards the end of this month. So link's going to be down below, and we'd love to have you on board. So markets are still open, so they're not closed yet. They're going to close in about 16 minutes here. Got the Dow Jones here slightly down about 40 basis points. NASDAQ, S&P about as flat as it can be, right? And this is exactly what we've been dealing with in the last 1 week, is because we have rallied so much and because we're dealing with such an overbought, overextended market, the momentum is now starting to fade out a little bit. We're not seeing those insane moves to the upside, because I also mentioned in my previous videos how everything has an opportunity cost, and for equities to be more attractive, the bond yields, either they need to come down or equities need to come down, right? One of those two things actually need to happen for equities to be actually more attractive, because if equities come down, they become more attractive from a valuation perspective, or if the bond yields come down, then there's more incentive for investors to invest in equities because there's a higher return versus the risk that they're taking on. Right now, with as high as yields as are, on a risk-adjusted basis, equities don't seem as much favorable to investors as the bond market. So one of those two things need to happen. Either the bond yields need to come down or equities need to come down before equities start to once again become a little bit more attractive on a relative basis. So we did have over 4,000 stocks advancing on the day, but doesn't feel like it, right? It just doesn't feel like there's over 4,000 stocks pushing higher on a day like today when it's basically flat. And almost 2,000 stocks here declining. Wall Street turns to NVIDIA earnings in the week ahead as stocks try to keep their November momentum. So this is probably one of the most important companies in the world right now, especially in the stock market, because NVIDIA has just been on a massive move in 2023 on the back of artificial intelligence. So they are going to be reporting earnings next week. Of course, there will be several videos coming out on NVIDIA and their expected earnings. Energy saw a little bit of a rebound here, pushing up. Exxon, Chevron, all pushing higher on the back of crude oil prices, almost back up to $76 per barrel here. So up over 4% on the day. So very, very nice move to the upside. We did have consumer cyclicals. We had, semiconductors, we had financials, home improvement, industrials, utilities, all of these pushing higher very nicely. So, a little bit of that momentum coming back in, but we did have Google, Meta, Microsoft, NVIDIA very, very flat on the day. So energy was the big winner on the day on that rebound. So we're back up to almost $80 a barrel. So bouncing off of that support that we talked about in our previous videos at $73, $72 per barrel. So like in the low 70s. And of course, other sectors also somewhat decent, but communication services is down on the back of Meta, Google, and I believe even the likes of Netflix and Disney have been a little bit more choppy this past week. So over the last 1 week, though, all 11 sectors are still green. And in the last 1 month, we've only got energy that's been underperforming. Everything else is up and green on the month here. Over the last 1 day, we've got crude oil, gasoline, orange juice, everything pushing higher with palladium. You have Russell 2000. We got rough rice, copper prices, everything pushing up with coffee, oats, canola, corn prices, natural gas also rolling over. With Bitcoin just under 37,000 and Ether just over 1,900 as well. So when we talk about the trifecta, right? So crude oil prices since towards the end of September, they're down 20%. If you take a look at the dollar index since October 4th, it is down a little bit over 3.3%. And not to mention the 10-year yields since the middle of October, they're down over 11% as well. So all these three things have both been a contributor to market rallies and then market sell-offs. Of course, since July, they've been pushing higher. So markets did struggle and they sold off. And now the fact that they're down from September and October we've seen a very strong rally back higher for the market. However, we are now once again getting a little bit more ahead of ourselves. So if you come take a look at the S&P 500 percentage of stocks trading above their 20-day moving average, this index pretty much got tapped out at 89%. So yesterday we were at almost 90% of stocks trading back above their 20-day moving average. And I hate to break it to you, but we've already looked at this in the past and how technically we are overextended and overbought. And every single time we've kind of come up to this 85 to 95% level, what's followed is a bit of a pullback, right? So why would this time be any different? It's just how market cycles work. It's just how technicals work. And the fact that we are at over 80 to 83%, it's quite normal for the markets to roll right back down. Volatility here, on the other hand, quite interesting that I want to go over, is now under 14. So if you come over to the VIX index, you'll notice that we are sitting at now under 14 for the volatility. Let me just close this. So this is where we are, 13.93. And, we've talked about when the VIX is low, it's time to go. When the VIX is high, it's time to buy. And right now the VIX is indeed low, quite low. So I think it's really, really important for us to be cautious going into next week with NVIDIA's earnings. I think the GDP numbers are also going to be scheduled here to come out. And it's going to start to really slow down because the earnings season is done. We don't have a lot of economic data coming out. Inflation's done, unemployment's done, the Fed meeting is done. So towards the rest of November, I think it's really going to be somewhat slow as people kind of get into the holiday season. But really, it's during these times when the bullish momentum starts to fade and maybe there is some profit taking, especially when you consider that we're also approaching towards the end of this year. So there could be some profit taking for this year, for this tax year, and other strategies to kind of cut out some losses for that tax loss harvesting. And when you combine all those, there is going to be some seasonality effects as well. Of course, December is one of the best months for the market in general, but those are some things to also consider. That I wouldn't be surprised if you do see a bit of a pullback prior to the Santa rally that everyone's expecting in December. And considering how low the VIX is, it's possible that we do see a bit of a pullback or a slight correction in the market, just considering that majority of the stocks are trading above their moving averages. We're overbought, overextended, volatility is low, and the bond yields are a little bit more back and forth here, right? So we did drop below 4.4% here at some point, but we basically pushed right back up, and we're now at over 4.45% at the moment for 10-year treasuries. Coming back over to the market, so if you take a look at S&P 500, so SPX over here, again, you can see that we're kind of approaching that resistance, getting rejected right over here. This is going to be that level to watch for S&P, just over 4,500. And again, RSI, MACD overbought. And over the last 3 days, you'll notice that we have really just traded sideways. We've consolidated a little bit. And we're not really seeing a lot of that momentum follow through because of the fact that we are overbought and we're at a resistance. So that's going to be that level to watch. That's the red arrow we see on the chart. NASDAQ, same story. You can see that we are, again, RSI, MACD, very similar to the S&P 500, overextended and overbought, coming up to that resistance. So again, we're going sideways. We're trading in that range where over the last 3 to 4 days, we haven't really seen a lot of momentum, but instead the market has basically been very, very flat. So, this is a good indicator of the price action overall. When the markets are not really moving all that much, that's a perfect indicator of why there is momentum starting to fade a little bit. And you can see some of the bigger culprits. We've talked about Microsoft. Microsoft has been the most concerning of them all because of how overbought Microsoft was. And again, we're starting to see some profit taking, some pullbacks in Microsoft, now under 370, down almost 2%. So going over to Apple first, and Apple here on the day, about as flat as it gets, right? Just up 2 basis points, literally nothing. It's basically trading at the same price as yesterday, and we're approaching that resistance right now. So we're literally at that resistance at just under 190. Got an overbought RSI and a MACD as well. So obviously we've seen a very, very significant move to the upside, but next support really is going to be 179, close to $180 for Apple. Amazon, on the other hand, resistance is going to stay put at 146, so that's going to be that level to watch with a green rectangle and a support staying roughly at 134, 135. We did see a bit of a pullback. Now we're seeing that momentum back up for Amazon. Tesla, on the other hand, again, very, very flat, so not really a lot of move here. Resistance is going to stay put at $240. So this right here is going to be that resistance, and of course we've got that lower high and this lower low pattern, so in this downtrending channel within which Tesla's been trading. And right now we're seeing that momentum back up after the rallies that we saw earlier in the week. Support level is going to stay put in the low 200s for Tesla as well. NVIDIA approaching that resistance. I think next week is going to be very, very critical, obviously, with NVIDIA's earnings coming out on November 21st on Tuesday. Support level is going to stay put at 400, resistance at 500. We got an overbought RSI and MACD. So got to be super careful. I will be doing videos on NVIDIA here leading up to the earnings as well. Advanced Micro Devices also overextended and overbought. I wouldn't be surprised if next week on the back of NVIDIA earnings, it does see some more volatile price action here, but we are approaching that resistance at 120s. So both NVIDIA and AMD are not only hitting their resistances, but they're also a bit more on the overextended, overbought side here at the moment. The support level is going to stay put at roughly around $112 per share for Advanced Micro Devices. Talking a little bit about PayPal, and PayPal here on the day starting to pull right back down. $56 has been the support level that we have talked about for PayPal for quite some time. Next support really is going to be under $51, and resistance is going to stay put at $65 per share. So we've got a little bit of a back and forth here with PayPal. Of course, the overall trend, the sentiment is very weak on the company. Right now, we're really just consolidating sideways with the support at 56, all the way down to 51, resistance all the way up to $65 for PayPal. Talking about Visa. Visa also approaching its resistance at 250. So high for the day, 250.24. We've got a resistance at 250.39. Almost an overbought RSI with the MACD as well. Support level is going to stay at $245 for Visa as well. We've been seeing a lot of consolidation for this company, although the last few weeks have been very strong for Visa with a very nice rally of 9 to 10% from lows of about 228 to where we are at the moment. But of course, we're now coming up to that resistance for Visa at the moment. Talking about Meta platforms, and Meta here bouncing off of that support. So very nice green candle on the day, but only up 24, 25 basis points. And this right here is the support level that we've talked about in our previous videos. So very nice level. And the next resistance and target really is going to be all the way up to $350. That's going to be in line with this previous resistance for Meta as well. Netflix. It's another one, along with Microsoft, is one that kind of scares me and concerns me a little bit more. Very, very overextended and overbought. So I think it's only a question of when, not a question of if. That's another thing that I want to point out is with a lot of these companies is that it's only a question of when, not a question of if. And what that means is they are going to pull back. We know that, right? It's just how the markets work. And they are overextended. They are overbought. So it's not a question of if they're going to pull back. It's a question of when they're going to pull back. Because, like I said, we are overbought and this happened before. Over and over and over again, and this time will not be different. So support level is going to stay about at 452, resistance all the way up to $485 per share for Netflix. And Google starting to see a little bit of that momentum back up, but down 1.2% on the day, approaching that resistance between 139 and 144 for Google. That's going to be inside this red rectangle. That's exactly where that resistance is for Google moving forward. And finally, we got Microsoft here. Support level is going to stay put at 366. That's really where we are. A little bit of a pullback. RSI and MACD showing signs of some potential pullbacks here in the future, considering how overbought we really are moving forward. And finally, we got Costco and Enphase. Costco here starting to drop once again, with the RSI and the MACD also showing signs of some weakness and coming back down. And finally, we got Enphase also pushing higher a little bit. So Enphase definitely having a bit of a stronger day relative to the markets and a lot of other stocks here. So 2.2% green. RSI MACD showing signs of some potential upside. So Enphase is kind of like on the other side of the spectrum where it was oversold and it's now starting to show signs of some momentum back up. And support level is going to stay put at roughly around $92, $93. So I think the key takeaway from this video that I want you guys to have is that it's not a question of if, it's a question of when. And it really, this time is no different. This has happened before. We've been through this several times over in the last 3 years since I've been covering this market updates and analysis. I mean, we've gone over this cycle like hundreds of times as long as I can remember. So there's nothing new to it, right? We become overbought, we pull back, we become oversold, we rally, we get a rebound, we become overbought again, and we start to pull back. So this time will not be different. It's just a question of when, not a question of if. Now, markets can remain irrational longer than anyone can remain solvent, right? One of the greatest quotes of all time. And that is just to say that markets can remain overbought longer for longer than we can remain solvent, right? So I wouldn't necessarily short into this market unless there's clear indicators that there is, markets showing signs and confirmations of weakness, and we could see a significant pullback. But there is going to be a sizable and more of a respectable pullback in the future. It's down to 4,400. But markets can continue to stay at these levels for longer. So that's exactly what I think we need to understand, is that just because the markets are overbought doesn't mean that we're going to sell off. And just because the markets are oversold doesn't mean we're going to see a rebound. It's really kind of understanding risk and reward and kind of turning on and off that dial of how aggressive you want to be. So the way I play it is I'm looking at these stocks, I'm looking at overbought, overextended conditions, and I'm looking at selling covered calls, right? For example, that's going to be a hedge for that potential downside. And if the markets drop, great. If they don't, this trade sideways, even then that's a great scenario, because on covered calls I'm basically betting on markets either trading sideways or going down, right? So 2/3 of the probability is kind of like in my favor, because that marginal upside from these overbought, overextended levels is already low compared to the marginal downside. So hope that makes sense. And again, if you want to get access to all the alerts and updates and analysis and spreadsheets and everything else, links are going to be down below for our Discord. We'd love to have you on board. If you have any questions, feel free to reach out. 16% annual discount that's available till the end of this month. As always, happy investing. I'll see you all in the next video.